you talk about finance, it is a very core essence of human life because there is nothing you want to do without the finance, even if you're a medical doctor or whatever. And people in this age and time, they find it very difficult to manage their finances. The financial market is not restricted to the equities market alone. And so people need to understand that when we're talking of equities market, we're just talking of a segment or a section of the entire financial market. So for the equities market here today, it's been very, very interesting. Nigeria currently sits at 43.2 as at yesterday close of the market.
Face your day-to-day work, right?
Yeah.
As a professional, but leave the people that are into finance, let them manage your money.
Yes.
Because now we're even seeing an amazing return on investment.
The Nigerian ecosystem seems to favor the equities market because the macroeconomic fundamental has been very stable. The FX has been very stable. The exchange rate has remained the way it is. The interest rate has remained the way it is. Even the inflation that it just went up, it was as a result of the energy crisis because of the PMS that increased by about 60%.
Hello there, viewers. It gives me great pleasure to welcome you to the maiden edition of the Broadstreet Update in association with SCM Capital. We're going to be giving you a lowdown of the stock market, investment opportunity that exists. Ultimately, what we want to do is to be your investment and wealth compass. We will be happy if you make more money, if your life is more enriched. And today I have with me the head of research at SCM Capital, Olajide Dahunsi, is going to be doing, us that lead on what is happening in the stock market, what should we look out for, and a whole lot of other exciting information. So, Jide, welcome. Good morning.
Yeah, good morning.
Yeah.
Thank you very much.
So, how do you feel? This is the first episode. I'm happy. I'm delighted. For me, one of my major one of the things that gave me the greatest joy is to see people succeed.
Yeah.
And one of the most critical aspects of success is finances, because once you sort that, at least 80% of life problem is solved. So what do you think? Yeah. So welcome.
Sure. Yeah, thank you very much for this particular opportunity. It's a great honor to be here and to also discuss the entire Nigerian market and even the global market as well, and various unfolding developments in the market. Yeah, when you talk about finance, it is a very core essence of human life because there is nothing you want to do without the finance, even if you're a medical doctor or whatever. And people in this age and time, they find it very difficult to manage their finances. And that is why most times they call brothers and the rest like that. But now that we are having an opportunity within the financial market space, and even the financial literacy is grounded now, I think people can manage their finances well without necessarily bothering relatives or whatever, or even what. So the financial market is good enough for everybody to partake in it and have a very fair share of what is happening in the financial market.
Okay, yeah. So let's take it from the top today. I just feel that we need to let's do a year-to-date review of some sort.
Okay.
So it gives everybody perspective and context as to where we are, so walk us through what has happened year to date. You generally from the stock market perspective, the performances, the all-share index, and all of those variables, year to date performance, so that people can have an overview of where we are or where we were starting from the year and where we are now. Then we will now look at projecting to the next how many months to go now? About 8 months. Yeah.
All right. Interesting. First of all, let me start by saying that the financial market is not restricted to the equities market alone. And so people need to understand that when we're talking of equities market, we're just talking of a segment or a section of the entire financial market. And maybe because of that is the darling or the reigning thing now in the financial market ecosystem. So there is need for critical attention and analysis as regards that. All right. So for the equities market here today, it's been very, very interesting. Nigeria currently sits at 43.2 as at yesterday close of the market. And that is the global leader in terms of the financial markets. All right. And even when you look at the various...
So for context, quickly, that means that if you put in 100 K, for example,
Yes.
in January, it means that if you want to cash out now,
Yeah.
using the time of what people know, you get 143K.
Okay,
Plus
so
or minus.
okay, that's in respect of exchange traded, all right, the ETF.
Yes.
ETF. So, but overall basket, which is the whole share index,
Yes.
all right, the whole share index has gained 43.2%. So technically, if you have done that, the average you'll be looking at is that. However, it is not all the stocks that have moved that particular trajectory. Okay, we have some bedweather stocks, we have some value stocks, and a couple of other stocks as well. But one thing you can be assured of is that across the indices, they have significantly been on a very good trajectory this particular year, and that is drawing global attention to the Nigerian market. So it is not a time for you to panic. Actually, it's not a time for you to think you are out of the entire party. The party is still on. All right. It just depends on how technical and how serious you are with your analysis to be able to partake of the entire cake that is being baked in the market.
Makes sense. So, in terms of the other part of the financial market, would you like to also expand on that? What's happening generally?
Yes. Other aspects of the financial markets, we have the fixed income market. We also have the real estate market. We have also the alternative markets, the FX, the cryptocurrency, and the rest like that. Yeah, they are also doing well. All right. However, all of these things are based on macroeconomic indicators. So before you can dabble into a section or a part of the market of the entire financial market, you need to understand the macroeconomic indicators that favor that particular market. All right. Let's take, for example, inflation, right? Inflation is currently at, the last reading was 15.38%. Now, if you're going into the financial market, you know that when inflation continues to go on an upward trajectory like that, technically you should know that the CBN has the obligation to respond to that. And when the CBN responds, they'll be responding with an hawkish policy, which will favor the fixed income market over the equities market. All right. So you now understand that you need to do your macroeconomic indicators analysis very well to be able to understand which side of the financial market you are going into. So for now, the Nigerian ecosystem seems to favor the equities market because the macroeconomic fundamental has been very stable. The FX has been very stable. The exchange rate has remained the way it is. The interest rate has remained the way it is. Even the inflation that it just went up, it was as a result of the energy crisis because of the PMS that increased by about 60%. All right. But that is just a little, it's going to be short-lived. And that is why the equities market remain very resilient because a whole lot of policies have supported the equities market. All right. And that is why all other fixed income market, all other markets in the financial market, they are not thriving as that of the equities market.
Makes sense. So let's look at it from the sectorial perspective.
All right.
So, which sector is leading in terms of overall performance now?
Okay.
And which sector is lagging, if we can put it that way. By that, I mean different sector, financial service,
I understand.
insurance.
Yes.
Can we just do a blow-by-blow review of some of them?
Yeah. So there are five key indices, the sectoral indices. Okay. We have the banking index, we have the insurance index, the oil and gas, and the rest like that. Currently, the oil and gas is doing more. All right. And of course, it has been favored by what is happening in the Middle East. All right. And so those who have actually moved the oil and gas index has been the likes of the upstream sectors, the Haradel and the Seplat of this world. All right. So outside that, then we have the banking sector.
But Middle East crisis.
Yeah. Middle East crisis. Yeah, they did well as well. All right. Yes, they did well as well. However, this Middle East crisis has added to that because you can imagine we started the crude oil per barrel at $68 and currently at 105. So you know technically that they have made a spread of over 100% or how much or 100%. So that will eat into their top line. And if the OPEX remains relatively flat, that is going to increase their EBITDA and then technically their distribution at the end of the year. So that is why investors are now looking to the opportunities that the oil and gas is a cash cow as we speak in the equities market. Then follow through is the banking stocks, the banking index. All right, currently is sitting at 58% year to date. All right, so it's outperforming the global index. The all-share index.
Yes.
And what is moving that is that there are a couple of policies that favor the banking stocks, all right? And they now have a war chest of their recapitalization has been concluded already. They have a war chest of that cash to throw out and get so many things around that. The economy is doing fine. People are now accessing some of these loans. So at a very high rate like that, they can return very well in terms of their interest income. And their distribution has been very fine as well. You can imagine the dividend for GT Bank at 12 naira. Final dividend, total dividend, that of Zenith Bank at 10 naira total dividend. So all of those things are spurring investor sentiment. Aside from that, there's something that's also happened recently, the FTSE Russell relisting of Nigeria into the frontier market. So it opens Nigeria markets to the global world to be able to come in. And when you look at the risk then, the market has been de-risked technically because the FX challenges that been that posed a lot of challenge to repatriation before now is no longer there. So transparency in the FX market. So you can buy the FX today, you can change it, buy the equities and go out tomorrow. So all of those things have favored the banking stocks. And that's why they have also been on trajectory. So when foreign investors are coming, they want to come into those stocks that are highly liquid. Right. They have that strong fundamental and they have that projections into the future. And those are the things that have been backing the current rally. And even their fundamental is very strong as we speak. All right. And so all of those things are really what we are seeing in the Nigerian equities market as we speak. All right.
So about the insurance market, you said there are 5.
Yes,
so
yes. The insurance market, currently they are undergoing their own recapitalization. They are supposed to end by the end of this year. However, one thing about the insurance is that you find most analysts even running away from insurance analysis because the analysis is not really very straightforward. Their projection, you can have profit this year and next year you can be in that loss depending on the kind of claims and the kind of risk assets they also undertake. Take for example an insurance company underwriting a vessel, right? And now there is a crisis in the Middle East and that will affect the vessel. It will affect their payouts as well. So all of those things is actually what is eating down on the insurance stock. So they are doing well, but they are the least amongst them. As at yesterday, they did year-to-date 0.18%. Yes. So that tells you what is happening. But what will support the insurance index or the equities very soon is the policy. They just passed their act last year. That policy of compulsory third-party insurance, and then they've increased their the minimum that you can also do in terms of your premium. So that is going to help them in a way increase their top line. All right. Yes. But the challenge they will always have is the claims. All right. Particularly the Lagos roads, the downfall drivers and the rest like that. So all of those claims are, how to repair cars now, the challenges around that. So those are the things that is going to be eating or that has been eating on the financials of the insurance stocks. So you don't see that rally or that sentiment around the insurance stocks. Okay. So, but we have the fast moving consumer goods. All right.
So FMCG is different, or do you class manufacturing together? Is there a manufacturing index or an FMCG?
When you say manufacturing, you now have to break it down into what are the manufacturing. There are some that are industrial goods, and there are some that are consumer goods. Okay, so when I mean FMCGs, I'm talking about the consumer goods.
Yeah, so I'm saying that in the market, you said 5. So because I want us to work with that structure. So we've done 3.
Yes.
So is it manufacturing or FMCG
consumer
index?
goods? Consumer goods index. So it's consumer goods index. You find the likes of Unilever, you find the likes of Wow Foods, and the rest like that. Okay. So the consumer goods index, right? It's been on positive trajectory as we speak. And what has supported that is that prior to 2025, in 2023, we had the macroeconomic shocks or the reforms that this government did. And because the fast-moving consumer goods or the consumer goods, they were FX dependent, largely FX dependent because of sourcing their raw materials and the rest like that. That devaluation, we had a 40% and about 40% of or more 2023, 2024. All right. That significantly impacted their financial statement. And even the buying capacity of consumers as well was impacted, and that eats into their financials. So when you look at their financial, you see that even with their price actions that they've done in terms of their commodities, they did not perform very well, all right, in 2024. And when they got to 2025, they used that to normalize their financial statement. So by the time people pulled out of that particular environment, you saw those valuations dropping significantly, even below the base that they were supposed to do. So right now that their financials are now turning positive, most of them have left the wood, and even some of them have started releasing their Q1 results now, and it's very fantastic. So that is now giving an investors an idea that if inflation is remaining very flat as we speak, and exchange rate is remaining as we speak, there is no round tripping again, then this is a sector that we need to come back into because the valuations have been very, very low now, and now they are coming back up. So that is why those ones too are on upward trajectory. All right. Then we have the industrial goods as well. All right. The likes of Dangote Cement, WAPCO. That also, what impacted them, the FX also impacted that, and the buying capacity also impacted that. But right now, most of the, particularly the cement industries, all right, they are going to receive very huge sentiment, positive sentiment from investors because of the level of infrastructural developments that this particular administration is embarking on. And this is the political season, so many projects have to be completed and they need those cements as well. So those ones, and that's why you see Dangote almost 1,000 naira now, WAPCO gaining over 50% year to date, and the rest like that. All right. And aside from that, these are the stocks that are very liquid, and they are also going to be listed on the FTSE Russell as well. So this is where investors are also coming into. All right. So aside from their fundamentals has been very strong, there is also an anticipatory sentiment around them that they are going to do better than what they did in prior year. And we have started seeing that in all of these various indicators where we're seeing that. So they are going to be very fine.
So net, what I'm seeing, because I'm learning so much, so that those across the major indices, it's just like probably insurance that is a bit in the interim.
And that's
hopefully
hopefully
they will rally at some point. But at least out of the five, four is looking good.
Yeah, sure.
Then it means that net within the whole spectrum, there's a lot of opportunity.
Yes.
You know, one of the things that even triggered these our stuff is that a lot of there are funds that are quietly just doing well. So let's say even direct equities. So, but the whole idea is if you're not a technical person, like probably somebody like you, most of the time, what I recommend is safe. Face your day-to-day work, right?
Yeah.
As a professional, but leave the people that are into finance. Let them manage your money.
Yes.
Because now we're even seeing an amazing return on investment for all these fixed income, what do you call it? No, money market.
The money market.
Money market,
yes.
you know.
Yes.
Because you see, let me tell you what it is. For some of the things that we are getting the results, if you tell people in other clime that this is the return on investment, they will tag you as Ponzi.
Oh, of course, yes.
Even within some African markets, if you tell them that you can do an 18% on a money market fund, they're like, what are you saying?
Of course, yes.
And in UK, what's the average in US? Maybe 6%, 8% if you are lucky.
Yeah, sure.
But here you are seeing 18%. In certain instances, you can even do slightly more than that, depending on the performance of the market overall. Then if you do some targeted there are some specific money market funds that they are tailored towards that particular sector. You can do some crazy return on investment.
Yeah, sure.
So what the whole idea is that I don't know why it's like there's so much information out there, but people are still not making a move. What do you think what do you think is the problem around that? When there's so much opportunity to make money, to turn around your capital, then people are not seeing it. What is the problem? What can we do?
Okay. First of all, we need to understand our own system as a whole. All right. Our Nigerian system is a consumption based. All right. We're not doing more of capital accumulation.
Yes.
Even from childhood, you give a child money, the next thing is thinking of biscuits and the rest like that. So right now we're beginning to come to realities that financial literacy is very key. So we are driving gradually to that. Like this podcast is also helping and various other things. Hardly will you see some reels now without somebody talking about finance. So gradually those things are coming up.
Makes sense.
All right. So yes, so that is one of the reasons. And then that has also been very responsible for the kind of the risk profile of everybody. All right. So when you talk about the money market, depends on your own risk profile. There are some people that they hate losing money. All right. And so if you have bought a stock today and the next day, maybe some people are taking profits and the stocks goes down, your heart will continue to beat. So that's why money market is very safe, because it is assured.
Yeah, stable.
Very stable and the rest like that. So what we need to do is to take the financial literacy to the grassroots and ensure that people commit funds to their future. All right. One thing that this the Obasanjo administration has been able to do is to decentralize the pension thing. And that's why you hardly see people saying they have not paid their pensions again. All right. So if we can do that for the financial market as well for individuals, that will go a long way in helping people in the future who are technically thinking of depending on their children or relatives and the rest like that. By the time they begin to save now, let me take for example, Zenith Bank. As at yesterday, the Zenith Bank here today is over 100%.
Wow.
Oh, so if you have bought a Zenith Bank with a lose 100,000 naira during the up December thing and the rest like that, instead of buying shoes, buying shares and the rest like that, you know technically you are not having a 200,000 naira with you. All right. So those knowledge, those education is not deep now, but we need to continue with that. So we need to continue to tell people that the financial market is the way to go, irrespective of what you think would happen, maybe your skepticism, your fears around that now. The market there is a lot of market infrastructures now that builds security around your funds, so you don't lose out. No, they have been very strong now. Okay, hardly will you see a bank collapse now and this thing. So because of those policies and regulations around those things, so we need to take that message to the public.
Yeah, because things are pretty stable and it's interesting. You know, my theory around investment is this: even as an entrepreneur, and I say it a lot, and I even tell people in my office, then also even as individual, an average entrepreneur will target maybe 30% profit in a year.
Markup.
Yeah. So if I can deploy some of my cash to give me, depending on how value, because the more cash you have to play with, the more interest you can negotiate. So let's say I rally to 20%. So look at that. I'm working all through the year to make a 30% return. However, I can get 20% not doing anything, quote unquote, just leaving the money in a secured fund. How amazing. I just hope that people would really, really get inspired by some of this information we're passing across. For me, I'm very bullish around these things, you know, and that's why I'm also really excited that we're doing this. So let me ask you, so if I have a 2 million now, just to be able to break it down for everyday Nigerians or everyday investor.
Yes.
If I have a 2 million naira, how do you advise I distribute it? What would be your investment advice?
Okay. So, like I said earlier, we need to understand your risk profile. Right. Then we need to also understand your target return as well. That is when you begin to know which areas or how we'll be able to do some asset allocation in terms of, okay, you have fixed income that is equity based or funds that is money market based and the rest like that. So for me, if you have a 2 million naira, you commit some funds to the equities market because that's the darling of the economy now. And you also commit some funds to save assets as well. When we talk of save assets, we're talking of assets that their values and their returns will not be shaken irrespective of what is happening in the market. And that's the fixed income market. So all of those things put together, fixed income, equities market. There are some risk assets that you won't want to go, the cryptocurrency, the alternative asset, the real estate and the rest like that, because they are not that liquid. All right. So with 2 million naira, you can do a 60-40 All right.
Split.
Yeah, 60-40 split. Now, that 40% is for fixed income market, which is going to assure you the money market is around 17%. The last treasury bill that was done on Wednesday was 19%. So if you bought a treasury bill, you are saved 19% for the entire year. So you already have a 19% on your 40% allocation. Then you go to the equities market. You now look at which of the sector is driving, which of the sector has that fundamental, which of the sector has also that sentiment. You can't rule that out, okay? Because some stocks can have fundamentals, they can have the value for the future, but the sentiment is not there. All right. So you also look at that, then you'll be able to apportion your resources around that. So at the end of the day, 60% in the equities market, 40% in the fixed income market. When you put that together, you probably will be far above inflation. So you'll be having a real return at the end of the year.
That makes sense. So let's move and just quickly, look at what's the outlook for the market generally, if you could put it.
All right. The market is moved by so many factors as we speak, and those factors are still existing. All right. Even in the near term or in the long time, maybe a 1 year time, the market is still going to be moving that trajectory. First of all, is that the fundamentals are right as we speak. All of them have returned. In short, they are consolidating their financial statements now, which shows that all of those things, extraordinary gains or losses that they reported before now, they've all taken them out of their financial. So the financial is clean now, and we can begin to ride on those ones. All right. So aside from that, there is something we call structural liquidity in the system. Structural liquidity in the sense that this particular fund, would remain in the system for a very long time. And this liquidity is running around the available instruments in the market. Take, for example, the standing deposit facility with the CBN is currently at 4 trillion naira. All right. So the money that is available, but is looking for investment is over 4 trillion naira. Just yesterday, the FAC shared 2.04 trillion. That liquidity is coming back to the market and is looking for investment instruments to go in through. So all of those things is supporting the market. There have been market infrastructures you can buy today. The T+1 is going to be starting very soon. The market extended time period is also going to be happening very soon. All of those things are supporting that market. The FTSE reserve, we've talked about it. They are coming in by September. So people are anticipating that foreign investors will be coming very soon. Now, another thing is that the PFAs, they've been given the opportunity to expand their risk assets now, which means that they can do more of equity. And these guys have cash almost every day. They have really cash. Good, so they are looking for where to put this money. So these are institutional investors that will not go away anytime soon. All right. The market had also decoupled from the 50-50 dragging between FPIs and local investors. Right now, we have over 80% local investors and 20%. So that has given stability into the market. And you can be assured that these change won't happen anytime soon. So you can be confident of that. Now, the results are not disappointing, which shows that confidence is in the Nigerian market, and all of these things will continue to drive and push the equities market forward. So our best outlook for the equities market this year is that it's going to do almost 60%. And particularly now that you'll see that the effects of the macroeconomic shocks or the energy shocks in the Middle East has not really impacted Nigeria as a whole. All right, because our FX are stable, they're stabilized over time. Our reserve has also hit $50 billion. So that is really giving confidence into the market that Nigerian market is solid enough. Now, the pre-election spending is going to throw out a lot of money into this economy. All right, the federal government is going to be borrowing about 32 trillion to fund the budget. The budget is 68 trillion. All right, so new monies will be created, and that will add to the liquidity. So if you settle contractors settles those boys. Those boys will also look for, let me keep parts, and they will drop it in the equities market. So all of these liquidities are coming, and you hardly see profit taking in the market. So that is what is keeping the market going. So
it's optimism. I just hope that people can balance whatever is happening on the other side of maybe inflation and all of that. There's a way you can balance your life if you go the investment route.
Of course, yes.
So it's now left for the audience to really be disciplined. I think the key word there is that ability to delay gratification and to be very disciplined, very structured, very, very strategic in your investment. We hope that if we do this continuously, maybe we're able to lend our own little quarters to that development in terms of people taking investment seriously
Yes, I used to tell people that you don't need, before now, maybe you'll be afraid of going to the Lagos Island to register. And that's one of the market infrastructures. You don't need to come to the Lagos Island or Victoria Island or to any of the offices of the asset managers to open an account. You can do that on your phone. All right. And another thing is that you don't need 200,000, you don't need 1 million naira to start investment. As little as 5,000 naira. Just test the depth of the market. Like the people will say, you test the depth of the water with your just one leg. So just test it with 5,000 naira and see how it goes. So by the time you do it, and luckily for the fixed income instruments, the money market instrument, the return is prorated, so, and is amortized. So you can always see it every day. Even if it's just 1 naira, you drop 5,000 naira today, you come back, it's 5,001 naira, 5,002 naira. You know that technically something is on your money, and that will propel you to do more. All right. So if you are afraid of investing and think that you want to lose money, just start first. All right. By the time you start and you see how delighting, how interesting it is, then you can continue.
You get addicted.
Exactly.
There's nothing else. I don't know how I put it. Is that I think maybe I don't know the kind of feeling that can be likened to when you put your money somewhere, especially if you do money market. Then your investment is now ripe to get. Maybe you did 6 months, which I've done a couple of times, for you to see that extras at the back, like
without doing anything, just stressing yourself.
Like, do you understand what I'm saying?
Yourself,
and in Nigeria, we are returning what I can call a super abnormal rate, without the risk of the 2008. The market fundamentals have been tested and have been found to be very, very clear and okay. Bearing little shocks here and there, but
of course you can't take that.
At the end of the day,
the market
overall net, the market fundamentals are good. So I don't know why, but I just hope that people, to me, it's a passion point. I just hope that people get it. Like, take, no matter what, take just a little delayed gratification. And how Robert Kiyosaki said one time that made an impression to me as a teenager when I was reached that border. But it wasn't even in the stuff. It was giving an example in one of the series, because I read almost all the series as that when I was 16, 17, going to 18 years. But he made an example of the wife that wanted to buy a car. And all he just told the wife is that, don't buy that car.
No.
Put that money into this investment and wait a little while. Take out. You know that they use the profit from that investment to buy the car, and the money stay there. So people, part of what I said is, see, if your kids are going to probably pay, if you are lucky enough, let's say there are bonuses given in the office or something, why don't you keep it, or try and draw in on your rent, like keep your rent safe. There was a time last year, what I did is, I did some transaction and I had the rent and I still had 6-7 months. What I did was to put in the money to say, this money I must slave you out. You must generate. And it generated almost 1 million or something. Just because I could work on that. I believe that the key word there is delaying of gratification. Anyways, we'll keep doing this. So before we leave, I want us to go to the topical issue of the week. And we'll be doing this every week like that, apart from the general outlook, is to say, what's the first you wanted to say?
Yes, I wanted to quickly say something before we go to that topical thing. All right. This part of the world, we are trapped psychologically in terms of when you were mentioning the delayed gratification. Some people just believe that you have to spend money once you make that money. All right. So if you look at your budget and you look at your expense lines and you think that there are some certain expenditure that you may not do without your basic expenditures and the rest like that. If you can put that aside and you look at some other unnecessary expenditures, not unnecessary, but you think that instead of taking 2, you can take 1 and you'll be fine. So the 1 can actually be saved. And that is how to develop that discipline in terms of saving money instead of spending all. All right. So draw out your budget and see those things you can take out. If you are fond of taking granules morning and the evening, you can take just in the evening and keep the one for the money. All right. And you will see that by the time you start keeping the one for the money, you will have enough to buy for the entire month later on with your investments.
Makes sense. Thank you so much. So let's move to the topical issue, which is what's the fuss about the Dangote subscription? No, the subscription that is coming, the
IPO refinery.
I want us to shed a little bit of light, knowing that it's few months, so the general structure, because from what I know, he's trying to do multiple countries. What's the pros and cons around investing? What should people look out for? Because you need to plan ahead.
Yeah, sure.
It's a $5 billion,
yes,
IPO, and
no? Okay.
Yeah, no, the valuation is 50 something for what I know. You can correct me, but I know he just want to raise 5 billion something.
Of course,
even though I think he left it open, but I think they are looking around 5 billion. So, and a lot of people are already preparing themselves. So, what do we need to know about that offer?
Okay, so you really need to study the fundamentals of some of the listed refineries across the world and see how they are doing. And besides, as well, when you look at Dangote, he has that fundamental, and all of his industries or all of his companies listed are doing very well. Okay, so that's, you can begin to make a projection that is going to be very interesting. Okay, what we don't know now is the pricing, all right, but you can be assured that it's an essential goods. That's one thing, all right. It's an essential good. So irrespective of the price, you can always see that elasticity there.
Are they going to bring it out in dollars since he wants to pay?
No, it's going to be a dual listing. It's going to be a dual listing.
Yes,
all right. Just like we already have a Seplat that is also dual listing London and Nigeria. Wando is also dual listing Johannesburg and Nigeria. All right. So for the London guys, you buy in dollars. For Nigerian guys, you buy. So it just depends on how the float is being shared between these countries. All right. So irrespective of that, and you can always elect your dividend if you're afraid of whether converting from dollar to naira, to dollar. Okay. So the structure, I am not really privy to the structure, but what I can tell you is that if you have the money, keep saving it up right now until that share comes into, you are going to have a significant value for your money in terms of the Dangote.
You know, it's even commonsensical because for an epoch making
industry
like that,
of that magnitude.
So it will at least there will be that gain, immediate gain. Not of course you can't project. Because this is what happens when the stock comes in. There will be that initial rallying before it stabilizes. So even on the basis of that short term. Okay. But again, the play on Dangote should be long term.
The way it's going to come in is not by introduction; it's going to be by IPO. Right. So which means that during that period, you only buy at a stipulated price.
Yes.
All right. So it is until it is listed, then people can now begin to trade on it at the secondary market.
That's what I'm saying. I expect an immediate rally. Immediately it drops on the stock market.
On the stock market.
Why? Because a lot of people are not gonna. A lot of people are not going to be able to buy.
To get, yes. Not buy. To get.
That's what I'm saying.
Because it depends on the proportion that
even if you're not careful, they can give a 10, 15-day window and the thing is gone within 2 or 3 days.
No. This is how IPO works. You submit your own application, right?
Yes.
At the end of the day, they will see the total subscription and match it against the offer. Right. So if the subscription is far more than the offer, then they'll prorate it.
Yeah.
In the sense that, okay, fine, for every 3 offer, we are going to do just 1. For every 3 subscription, then return the money. Okay. All right. So those ones that are being returned can now come to the secondary market and start dragging what is available in the hands of people who have bought those shares. So within the period, they will be completing those book, whatever. You may not see it listed, but immediately it is listed, you start seeing that momentum in that particular stock. And because it's like we said, it is an energy stock. And globally, energy is needed day by day, irrespective of what you want to say. So that is a stock you should be looking out for. And investors are really ready for that. All right. And you're going to enjoy that because right now we are going to be listed on the FTSE Russell as well. So that gives an opportunity that it's just a coincidence. Russell is coming, T+1 is coming, extended time period is coming, and all of this by the time that giant comes into the Nigerian market. As of yesterday, the equities market capitalization is 143 trillion.
Yeah, right. It's crazy.
Yeah,
how it even moved into 100 and since 100 it's done crazy.
Exactly.
Remember that it was almost like it was jinx at not entering 100.
100.
We're almost entering. They went to
around
90,
and the rest.
then
like
it
that.
went to 100. And
Yeah.
before, I was not even checking every time. But just last week, I
Just
tell I was in 130 something.
140.
Like,
So you can see
how?
the trajectory. We're saying 43 trillion just in first quarter alone. So and you can now if you do a forward of that, so you should be having about 120. If you do a forward, all of that things being equal.
Yeah.
So give or take, if we have that volatility, profit taking, and the rest like that, you will still find yourself around 50% year to date. All right. So it's a good one.
It's good. Thank you so much. Of
Thank
course,
you very much.
For the viewers, we'll be leaving the details. If you want to get in touch with SCM, we'll be leaving it. You'll see it in the strip of this video, so that there are several investment opportunity I know that are available. You don't have to stress. Just put your money in there. It's safe, it's secure. They are regulated by SEC. So you can go and sleep.
Okay.
You get, of course. Well, I also invest with them, so it's a no-brainer. The response rate is fast. Everything is fast. You see all those funds that are available scrolling on this video. One day we'll have enough time to talk extensively, bit by bit, around some of these portfolios that you guys have. But in the meantime, you can always, look at the numbers trolling. They can get you a dedicated investment advisor, highly responsive. I've used it. I've recommended to several other people, and they're doing fantastic. I've gotten good feedbacks from some of the people I referred. I'm an advocate. So I'm sorry, I'm shameless. I'm an advocate. But that is it. So guys, that's it on this episode. But what I want you to do is please follow us across all social media platforms. That for the Business 360, you'll see it here. Then also follow SCM Capital on all social media platforms and try and subscribe. When you go to the website, you'll see the opportunity to subscribe to the newsletter.
Yes,
I get the daily stock, whatever,
stock
every
price,
day. I get it every day. So,
news and the rest.
So there's nothing you need. Now it's now left for you now to take that move. We've done all that we can, or we keep doing what we can to support you in your wealth journey. However, it still depends on you. Till another episode, take care and keep building wealth. Thanks.
Thank you.
Yeah.